Good afternoon to all. I, Dr. Sadhana Gupta, HOD Commerce, IIMT Gupta College, Greater Noida. Here I will discuss angel investment and venture capital funding opportunity for early stage entrepreneurs. It is the activity which is driven by IIC cell of IIMT College of Management, Greater Noida. In this topic, we have discussed what is angel investment, how it is uh, how to manage it, and what is the difference between angel investment and venture capital, and how to support early stage entrepreneurs. What are the opportunities are, etc., etc. So let's we start here. As we all know that if we start a new business, we required sufficient money to start a business. Without finance, there is no business, and there we cannot imagine without funding. So funding is the lifeblood of the any type of the startup or business, and funding is the most important part of the startup or any type of the business we can start. And funding, it may be different types, like as through banking we can say arrange it, and financial institutions, angel investment, venture capital, etc., etc. We can arrange the funds for the startup of the business or business point of view. If you are in the early stage of a startup business, seeking funding from an angel investors can be a great way to obtain financing without taking on debts. Working with angel investors also gives you access to their knowledge and mentorship, which can be critical in the early years of business. Understanding both the advantages and disadvantages of obtaining funding from angel investors can help you determine whether this route of the financing is beneficial or not for the business. Now we come to where the origin of the angel investors. When we hear a word angel, it seems like someone is coming from the heaven. But here is not this type of the. So the term angel came from the Broadway theater when wealthy individuals gave money to proper theatrical productions. The term angel investors was firstly used by the University of New Hampshire, William Bedgill, founder of the Center of the Venture Research. Bedgill completed a study on how entrepreneurs gathered capital and how to support the new entrepreneurs or new startup businesses. And now come to what is the angel investors? Who is the angel investors? Rightfully, as their name suggests, angel investors were probably sent by the heavens, extremely essential. It means that there are two types of the people. One who have sufficient money and who can do anything which they want. And the other side, the persons who have not sufficient money, they have some limitations, and they are very creative, but they have limitations, so they cannot do as they want. Uh, in business point of view, they are idea to start a new business, but they have not sufficient money, so they cannot do it, start a business. So these type of the these angel investors came into the these type of the people, so they can help those people. These people provide capital for needy but deserving business startups in exchange for convertible debts or ownership equity. And angel investors is a high net worth person who provides capital for a small startup or entrepreneurs, usually in exchange for equity in the company. The financial backing they provide may only be a one-time investment, or it could be ongoing financial support to help the new company in its early stage. Angel investors are often looking for a higher return on their money because they are doing business also, so that they want to get higher return on their money than they would get if they were to invest in the stock market. However, their interest in a startup usually goes beyond just monetary returns. They may be interested in working within a particular industry, mentoring a new generation of entrepreneurs, of making use of their skills and experience in a new way. Uh, we heard some names like as Rajan Anandam, MD of Google India and an MIT graduate, is one of the most uh, active angel investors in 2017. And like as Anupam Mittal, the founder of the Shadi.com, and Anand Sekharan, director of the Facebook, and many more names. These they are doing like angel investors. We have here a TV show named Shark Tank. It is a great example of the angel investors. Now come to the angel investors or venture capitals. While angel funding may be two types, venture through angel investors or through venture capitals. Also they provide a fund. While angel investors and venture capital both fund companies in exchange for a piece of their excel. There, there are significant difference between the two entities. Both tend to invest in startup, but typically they get involved at different stages in a startup life cycle. Like as an angel investor is more likely to provide capital for an idea. They work on idea only. Whereas the majority of the venture capitalists would like a proof to concept in hand. It means that they are supporting only running business. Those business who are doing well, they support these type of the businesses also. Another difference is the source of fund. Angel investors are sufficient to help those people, so they are the private investors and they invest their own money. And venture capitalists are run by the managers who invest other people's money in addition to their own dollars. It means that in venture capital, both combinations we have to use. They are using own capital plus other people's capital also. Other differences includes like as a smaller funding amounts as opposed to the venture capitalist who generally write funding check of $2 million or more. Individual angel investors typically write much smaller check. Those checks are typically between $10,000 to $1 lakh. And next differences is this: the angel investors are more likely to keep a hands off. It means that there are no such involvement in operational way. But venture capitalists, on the other hand, almost always take a board seat and are involved operationally in a company. So these are the differences between venture capitalists and angel investors. Now come to the characteristics. What are the characteristics of the angel investment? Aside from typically being high net worth individuals, angel investors also share other key qualities like as looking out for the team. team, it means the angel tends to be towards a startup that have been recommended to them or are in industries they know well with the potential to grow rapidly. They also often want to see a working prototype and a clear business plan because they are only invest in your idea. They are not seeing your business or etc. etc. But they are only invest in your idea. So clear your business plan. But most important to them is the passion, savvy, and bona fides of the funding team. Sickly safety numbers. Unless you are super angel, developing a healthy pipeline of quality deals is not easy. That is why they often do not fly solo. Increasingly, angels operate in what known as angel group, where they can pool their capital along with other accredited investors, raising the total investment level and lowering their personal exposure. In some cases, multiple angel groups join together in syndicates, thereby broadening their reach. The next one is there are now more than 400 angel groups around the country. They are typically organized by geography. Some biggies include New York Angels, Austin Angel Network, and Tech Coast Angels, etc. etc. Plus many angels groups who invest with other angel groups, individual angels, and early stage venture capitalists to make investment of $5 lakh to $2 million per round. Next point we have to discuss choosing favorites. It means generally we are speaking angels flock to certain fields because they are the master in their field. They are expert in their field. So these fields like as software, internet, healthcare, along with the mobile and telecom, and energy, utility, electronics, and consumer products and services are also popular in these expertise. And next one is the relation risk. The angels tend to look to return of about 25% or more over a period of 5 or so years via an initial public offering or an acquisition. Because they are investing in your idea only and they want higher return on uh, investing money. But make on no mistake, these are the super risky deals. The best estimate for investor returns is 2.5 times their investment with odds of positive returns less than 50%. So it might not be surprising to hear that only about 10% of the most angels total portfolio are in these startup investments. And now come to how angel investing works. How angels start your working. Angel investors prefer to get involved in the early stage of a company at this seed or angel at the very beginning because those people who have idea but they have not sufficient money and angel investors help them to start a business. So it is work like a seed or angel uh, at an early stage of a company. That could mean the angel investment when the company exists only as an idea, or it could come when a company is already up or running. Sometimes the angel investors arrive on the scene after the initial round of funding, which normally comes from the founders themselves. friends, families, or the founders of from banking, finance, or etc. Typically, initially, business funding is not a substantial. It is a common for founders to roll out their product or service with $10,000 or so its initial funding. Angel investors come in after the original funding is in place, but typically before a company requires a more sizable investment from a venture capital company. Their investment is needed to grow a company at a critical. In other words, we can say ki in early stage of a development. After the initial funding threaten to run out and before venture capital groups show invest in partnering with a promising business. And now we come to the what is the process we have to use angel birds. Like as firstly, the angel investors connect with the investors, developing companies through word of mouth, through business and industry seminars or conventions, and through referrals. Also, they come from professional investment uh, organizations, from online business forums, or via local events like as chamber of commerce meetings, etc., etc. Next, we if they are mutual interests, there are mutual interests. The angel investors will conduct due diligence on the young company by talking to the founders, reviewing business investment documents, and causing the industry the company is targeting. And next, once a verbal agreement is done between an angel in the is in place, a team sheet or contract is drawn up with agreement on the investment terms, payouts, or equity percentage, investors' rights, or protections, governance, and control parameters, and also an important key, eventually exit strategies for an angel investors. Once the contract is finalized, an actual legal agreement is created and signed, the deal is officially closed, and the investment fund are released for the company's use so that they can use properly and they may get success to run the business. While contribution amounts vary, funding levels can be as low as as $5,000 and as high as 1,50,000. Some angel investors group together as a syndicate. Syndicate, it means a group of investors and can provide funding up $1 million for the selected companies because it is a higher amount. So it needed a group investors. Angel investors don't usually acquire more than 25% stake in a company. Veteran angels founders know that the company founders need to hold the highest stake in their own company, as they also have the highest incentive to make their companies successful. Now, here we know how the angel investors works, and then come to the next one is the types of the angel investors. The angel investors is a somewhat general terms, and you can find the type of you can find this type of the investors in many different forms, including the following, like as friends and families. Uh, this is the most common source of funding for a startup because everyone start the business. If a family is capable, his friends are capable, they can help them, and they work like as a angel investors. Usually where a startup begin and looking for the financing. So firstly if we start a business, then we approach firstly uh, our friends and families also. So if they are helping to run a business, so it means they seems like a angel investors. And next one is the wealthy individuals. Wealthy individuals are those people who have a high net worth, such as doctors, lawyers, or successful business people are often willing to invest a large sum of money in exchange for equity in a business because they have not a time, but they have money. So they participate silently in a business. And next one is the groups. Uh, Many angel investors are increasingly starting to operate as a part of a group. Small investors are interested in this type of this group. These raises the potential for the level of investment significantly. And the last type of the angel investor is crowdfunding. Crowdfunding has shown their name crowd. It means that there are so many people in this funding type. This type of the funding is becoming increasingly common. It involves having large groups of people invest a small type of money online to reach a specific goal. It means that there are large number of people in this group and they invest their amount to make successful a specific financial goal. And next we have to discuss sources of angel investment. Since angel investors are typically wealthy individuals, it is not uncommon for the business owners to want to seek them out of funding. So, how do you find angel investors? And a few sources of funding include the first one is the angel list. Firstly, the sources of angel investment, where we get it. So, firstly, these in online platform, we see angel list, so that they help business owners find investors. है ना? कि angel list में आप you can see where is the owners, where is the investors. You can easily identify them. And next one is the angel investment network, an online network with over 2,79,000 investors. Business owners can create a profile or promote their business. If there are interested angels, they will invest simply. And next one is the LinkedIn. It is everybody known what is LinkedIn. It is a professional social network site, and like LinkedIn or other sites, Insta, you know, can give you a direct way to contact an angel investor. Because there in LinkedIn there are so many professionals are there. They promote their profile or their business and through LinkedIn or Insta, other social sites also. And next one is the local business groups or schools. The check local business schools or organizations also participate to see if they can put you in touch with an angel investors. Before you reach out an angel investors, make sure you have your business plan in place because they invest in your ideas. So you make a sound business plan so they can impress. They will want to make sure your business has the potential for success before investing in your money. And next, what are the advantages and disadvantages of the angel investment? If we want to invest their money, so what is the profits and benefits, or what are the disadvantages of the angel investment? There are both advantages and disadvantages to receiving funding through angel investors. firstly we have to discuss advantages of the angel investors. First advantage is we have to take on no debts, because uh, they use their money to have the new startup, or they took their money as a loan. They sorry, since they don't have to take out a loan, entrepreneurs are not on the hook for paying anything back. That is especially helpful should the company had some. It means that they are not given as a debt. They are helping to start a new business or grow a new business. So they participate as silently and do their things. And next one is the access to expertise. Uh, Entrepreneurs do their own business and they are expert in their field. So smart entrepreneurs look for angels with a wealth of business experience they can tap. Particularly useful are investors who have funded successfully companies themselves. And next one is the less paperwork. It means that companies that raise financing from angel investment or angel investors are exempt from a variety of filing with SEC and state security regulators, etc. And next one is the more money donor on the line. Once angel investment, there is a pretty good chance they will add another cash infusion later on in another funding round. So other benefits if we want to discuss, like as creditability from being associated with the investors, contact for potential customers or employees, contact with investment bankers, accountants, lawyers, and other professionals. There are so many professionals. Marketplaces knowledge and strategy using similar companies is the also benefit of the angel investors. And next one is the disadvantages of the angel investors. While angel investors make it possible for the business owners to get their startup running, there are some disadvantages to obtaining funding in this manner, such as a loss of equity. Many business owners give away between 10 to 15%. Because we earlier discussed if angel investors are involved in the business, they want higher return. So it may be 10 to 50% almost of their startup in exchange for funding. Angel investors may also expect a substantial return on their investment, sometimes equal to 10 times their original investment within the first 5 to 7 years. It means the first 5 to 7 years they want 10 times of the money. Uh, it is not possible in any type of the investment. So this is a very high return. This can create additional pressure for you and any employees. Before accepting funding, evaluate whether the business can grow at the rate that an investors would expect, and establish expectations for growth. Uh, if we are talking about point wise, then less control. Companies who work with angel partners may need to give up some amount of the equity in their business, because they want to share only partner business equity. They don't give loan to you. They are uh, participated as a equity holder. While that's normally a small amount, angel financing backers may decide they want a bigger role in business decisions also. I hit in the pocketbook. The angel investors requires compensation for their funding that typically comes in the form of equity, which could be more expensive uh, than debt financing, uh, etc. Potential for no voice investors, it means a big con of taking an angel investing is binding up with an inexperienced angel investors. It is very harmful who offers poor advice or poor hounds business on us for a startup status updates. That can especially be in the case with new angel funders who steal large amount of money into a company. After investing after investing their money in a startup, most angel investors take a hands-on approach to the business. For example, suppose we have discussed the experienced angel investors sometimes like to have an exit strategy in place. This is discussed in the characteristics of the angel investors, such as taking a business public or selling the company to a large corporation. They may encourage you to let go to the business before you are ready. Conversely, if you give away too much equity, they could choose to put a more experienced executive in your place, possibly removing you from the business that you originally created. So these are the advantages and disadvantages of the uh, angel investment. At the last, but not the least, we all know that our Prime Minister Shri Narendra Modi ji also emphasizes on the in Atmanirbhar Bharat and promote SME or new startup businesses also. And we know that India is a large India have large youth populations like as uh, around all over world 66% people are the youngsters in India of the total populations. So there are many chances for the new startups or new businesses or grown up India. So today India has 82 unicorns and signifying that the golden age of entrepreneurship is only beginning. It is incredible how these firms are going simply on domestic demand and uh, expanding their uh, simultaneously expanding their reach into an international market also. So the pace with which Indian youth are launching startup in testament to their ability and willingness. So youth get up ready for the new startups and new businesses. There are lots of opportunity to do anything. If you have decided to do, then you can do it. So all the best for youth to start a new business. Jai Hind, Jai Bharat. Thank you so much.